Welcome to Disruptive Successor, a show for next generation leaders in family businesses and entrepreneurs who want to disrupt the status quo and take their existing business to a whole new level. We all know that what got us here isn't going to get us there. This show will provide inspiration, advice, and resources to help you create massive impact. Hi, Jonathan Goldhill here. Welcome back to another episode of the Disruptive Successor Show. And today, my guest is Pat Soldano. Pat is the president of Family Enterprise USA and Policy and Taxation Group, a 501c3 and a 501c4 organization. And she is dedicated to promoting family businesses and their job growth and supporting efforts to repeal the estate tax. She has 30 years experience in the family office industry. And if you can tune into this episode on YouTube, then Pat will be sharing some of her latest research on the family business market. So Pat, welcome to the show.
Thanks so much, Jonathan. I appreciate being on your show.
Yeah, so tell us a little bit about what these two organizations are and what their missions are.
Well, I think you stated it really well. Family Enterprise USA has a simple mission. It's to promote job growth of family businesses in America. And it was formed in 2007. As you said, it's a 501c3. Policy and Taxation Group was formed in 1995. Its sole purpose is to repeal, reform, gift, estate, and generation skipping tax. And it is a 501c4.
Awesome. So that's going to be something we're going to want to dig into, make sure people understand what all those different things are. Do you want to kick us off with some of your latest research on family business?
Yeah, I'd love to do that. So family businesses are very, very important to the American economy. And I don't really think people realize just how important they are. 87% of the businesses in America are family-owned businesses. And that's if you define a family business, basically if the family controls by management or ownership. And the way we determined that is we employed 7 professors last year that completed this work early this year, which hadn't been done since 2003. We get asked, when we speak with members of Congress all the time, why are family businesses important? How many are there in the United States? What economic impact do they have on this country? And as you can see from the slide, for those of you that are going to view this on YouTube, 59% of the workforce is created by family businesses, and they generate 54% of the GDP. So they employ 83.3 million people, and they generate $7.7 trillion in GDP. That is why they are so important to America and so important to this economy. So again, 87% of the businesses in America are family-owned businesses. And so we think this research is very important. We've been sharing it with members of Congress as much as we can possibly do. We are on podcasts like this, doing presentations around the country, some virtual, some in person, trying to get people to understand just how important family businesses are to this country, once again, and the economy. So I have an annual survey, which I would love to share with you at some point, Jonathan, as well, which talks about the concerns of family businesses, what they're facing, what issues they have to think about and deal with every day in their business. And it also talks a little bit about how they handle their businesses during the pandemic.
Pat, I think we could make that as a download available in the show notes so that we can get that word out. I think it's always staggering for family businesses to learn that they make up such a large piece of the economy in the United States. And it's not just the United States, it's worldwide. I know India is almost all family businesses reportedly. But this is really interesting and impressive research. So yeah, let's take us through some more about some of the findings here.
All right, well, let's look at the annual survey. Again, we do this every year, Family Enterprise USA annual family business survey. This year, we were very fortunate to have the support of BNY Mellon. They actually came to us because they believe so much in the survey and asked if they could support this work. So I'm not going to go through the highlights because I'm going to go through each individual question. So we always want to make sure that who's responding to this survey is upper management, owners, senior decision makers in the business. And as you can see, 87%, 82% of the respondents to this survey are either CEOs or chairman or high level senior management position. What indices they represent is important because when we talk to members of Congress, and once again, Family Enterprise USA is an advocacy organization. So we represent all industries. Many of obviously are on the screen here. We represent all sizes of businesses, all types of businesses. So we're not a trade association, which is unique to any industry. And we're also unique because we represent the issues of the family business. And I'll talk about some of those like income tax, capital gains, estate tax. So in terms of who responded, as you can see at the top is manufacturing, real estate, food and beverage, agriculture. Agriculture actually was 6th last year, 4th this year. This is important information for members of Congress because when they initiate legislation, they still think we're a country of family farms. And yes, of course, we're a country of family farms, but we have more manufacturers, more people in food and beverage and real estate, and to some extent, construction and machinery. So we have to really understand that these industries, like family farms, have the same dilemma that the farming industry has, which is if the business has to be sold to pay the estate tax or for some other reason, they have to deal with this illiquid nature of their assets. So we want legislators to understand that. In terms of how long businesses have been in operation, Jonathan, you know this. Family businesses plan for the long term. They see their business as a legacy, not just for themselves, their family, but for their employees, as well as their community. So 17% of these businesses have been in existence over 100 years, and 76% have been in business over 30 years. So again, we emphasize to legislators, plan for the long term when you think of what laws you're going to initiate. The size of the businesses, 47% of them had 1 to 50 employees, but 35% had 50 to 100, and 17%, in fact, had over 500 employees. So many are on the medium to large size, but many also on the small end. 52% of these businesses pay above average to their employees in terms of compensation and benefits. Why is that important? Because once again, family businesses take care of their workers and their community as well as their families. And legislators need to understand that. In fact, the first business in America to ever pay benefits to their employees was the White Castle family, who's now a business that's over 100 years old.
And that, by the way, is not surprising data to me because all my clients are pretty much family businesses and all of them pay above average wages and their employees stay for longer than I would imagine the average tenure of an employee at a company. Speaking to the loyalty as well as the reinvestment in their people. I think this is great data that you have here to support that.
Yeah, and they need to your point, they need to make sure the legislators know that, because I will tell you, they don't know that. They don't understand that. And it's a great reason for legislators to help family businesses, because they do, if they really want to promote job growth, they need to promote family businesses that help promote that job growth in their communities. Mm-hmm. So during the pandemic, not a surprise, 58% of these businesses actually declined. This is very disturbing. And if you can see on the bottom of the screen, you'll see why they declined. The coronavirus was, at the top of the list, along with economic conditions and industry conditions.
Yeah.
That job growth, that job loss, I should say, or interestingly enough, tended to be on the bottom end of the scale, 1 to 50 employees. And Jonathan, I don't know when you talk to your family business owners, but most of the ones I talk to, they really struggled to let go of people. And so they worked very hard to keep all of their employees employed, including having them, do maintenance issues or do anything in the organization, just keep their employees employed. And so most of them, if they had to let go, they were in the 10% maybe a little more than that, unless, of course, you were in the restaurant industry. So again, I think it really speaks to how family businesses really take care of their employees.
And it looks like they added as many jobs as they lost, if I'm reading that.
Yeah, that's a really good point. 79% actually added 1 to 50 and 77% lost 1 to 50. So you're right. There's a little bit more adding than deducting overall in terms of this survey.
Right. Understood.
So how did they manage through the pandemic? We get asked this by legislators quite a bit. Mostly they tried to keep as I mentioned, their employees employed. They protected their employees by working remotely. They protected their community. They supported their healthcare workers. And some of them actually reduced or eliminated their distributions to their shareholders or their stakeholders because they knew that most importantly, they need to support their workers and their community. In terms of what their top business risks are, this is important, again, to make legislators understand that when they look at their business risk, recession or the market turndown is the top of the list, but look and see what's number 2. Government regulation is just killing family businesses. It's second on their list of top business risk.
Wow.
And for those families that support us, they understand how important advocacy is, how important it is to talk to legislators and get legislators to understand the impact of the laws that they pass on their business. Of course, coronavirus is number 3, and then cost of labor, and you can see the other answers.
But if
in terms of going forward,
Pat, if I'm reading the data correctly, it's 4 times government regulation is more than 4 times more important to them than, or as a risk, than the cost of labor or industry competition, that's quite a dagger in the heart of the government's chest.
Yeah, no, you're absolutely right. And I'm glad you pointed that out. And you'll see that when we talk about their economic priorities as well. And this is not unique to this year, by the way. Every year, too much government regulation is at the top of their list, number 1, 2, or 3. So it's always a problem. I think the pandemic, as you can see from kind of the bottom of this, they're still dealing with the coronavirus going forward. And the pandemic made these government regulations and tax laws even more complex because they had to pay attention every single day, right, to what was actually going on with the regulations and the new laws that were being passed.
So this is very interesting to me also because what I focus on with my clients are things that they can control. And while you might say, but they could control government regulation, they can more easily control recruiting and talent retention. I don't let them fall short on doing everything they can to fight for their recruiting and talent retention needs. So this will be interesting for us to talk about what some of the regulations are that they're most concerned about, as well as the market conditions. So let's continue.
Well, this is, the good news is while so many of them decline in business, they're great. They're very hopeful for 2021. 85% expect their business to grow, and economic conditions, industry conditions, and their strategic business choices is what's going to contribute to that. And then coronavirus that can be a double-edged sword, right? Some businesses actually grew through the coronavirus, but most of them actually declined because of that. And this is important for legislators, again, to understand, and for everyone that works in the family business world. And I know you already know this, Jonathan. Family businesses want to pass their business on to the next generation. So in this particular year, and this is pretty indicative of prior years, 36% of the ownership is in second generation, but look at third and fourth generation, very high percents, 20%, 10%. And that's true of management as well. And the struggle with family businesses, as you well know, is passing that business on. And so this is always an interesting a list of questions that we ask when we're trying to get them to understand how important passing their business to the next generation is. 55% of them have, in fact, passed their business on in some way, shape, or form. And 85% say, oh, it's absolutely critical to the sustainability of my business. And 80% or 79% say, yeah, it's my children's legacy. But when you look at the bottom right-hand side of the screen, you'll see that only a little more than a third have actually passed on control. And that's disappointing and not surprising. We get this similar response every year. And what I hear from the patriarchs and matriarchs typically is, well, I'm not ready to pass it on. You know, what am I going to do if I don't run this every day? The next generation is not ready yet. You know, the market conditions aren't there. The timing's not right. I realize it's probably why succession planning is at the top of the list for family business owners when they talk to people like you, Jonathan, and I'm sure you help them through it. It's just so difficult, but it's so very important. They admit themselves that it's absolutely critical for sustainability of their business, and yet they struggle. They really struggle to do it.
Sure do. Really not surprising, the gap between their wants and their actions.
Yeah, exactly. Exactly. So this is an important slide because, as I mentioned, we want to know what is their economic priorities. And as you and I just talked about, I mean, look at number 2, reducing regulations. It's second in terms of their economic priorities. Mm-hmm. And simplifying the tax code is third, which normally comes down at the bottom of the list. Again, I think the pandemic really played into that. Trade policies are at the very bottom. They're always at the bottom. And that's because trade policies, while they're important to family businesses, they're not as important as all of these other things on the list. And legislators lose sight of that all the time. They keep focusing on trade policies when that's not the most critically important thing to family businesses. And next, I'm going to share you the tax policies, which are a little different than economic priorities. But number 1, 2, and 3, as you can see, are pretty close.
Yep.
So income tax is first, capital gains, and then estate tax. I believe that income tax is at the top of the list because, as you well know, most family businesses operate through a pass-through organization.
Right.
And that's an LLC or an LP or an S Corp. And so they're still paying that 30 to 35% tax rate when corporate America is paying a 21% tax rate. Wow. So it's really important that family businesses continue to ask their legislators about 199A and not getting that eliminated, which is this, I don't usually quote tax code, but they usually know what that means. That, you know, President Biden has advocated he may eliminate that. And that is the small little bit of relief that family businesses got in the last tax bill. So it's just not fair that family businesses pay at a 30 to 35% rate and corporate America gets to pay a 21% rate. So that's my speculation in terms of why this is at the top of the list.
Okay. And what is that 199A? Can you just tell us a little bit more about that?
Yeah, it's, I'm not a tax accountant, but the reality is if you are a pass-through organization, you get to deduct a certain percent of your income because you qualify as one of those pass-through organizations, like I mentioned, an LLC or an LP or an S Corp. Right. And so it's a deduction. Again, it's a reduction in your income. It's not a tax credit, okay, right? And it doesn't affect the rate of tax. So again, it's not, it's certainly not as, and when it was originally conceived, it was much broader and had much more impact. But unfortunately, it got watered down, as happened so much in the Senate. So I'm going to talk about the different estate tax provisions we asked because estate tax is important to family businesses, as we saw. And we asked, which would you prefer? Making the exemption, which is now 11.7 million, not expire in 2025, of course, is at the top of the list. Reducing the rate to that of capital gains or 20% is second, and repeal is third. The reason I think that's the case is in this political and an economic environment, repeal is not viable. But reducing the rate from 40% to 20% is very viable and helps all sizes of businesses. And business owners are pretty astute, and they understand that that's more doable and more achievable than actually repealing the tax. And I will have to say that through Policy and Taxation Group, we were able to work with 2 members of Congress from Texas, a Democrat Congressman Quay and Republican Congressman, in getting legislation introduced in the House that will do exactly this. And there's a companion bill introduced by both senators from Arkansas that will do the same thing in the Senate. Unfortunately, it's not bipartisan. It's very important legislation is bipartisan, especially in this environment. And we're bipartisan organizations, so we really support that. So it is real. Will that be something that gets introduced and voted on this year, that rate reduction bill? Probably not. But you have to get momentum. It takes years. I mean, I've been working in Washington, D.C. for over 25 years now, and it takes a long time to get things done. And if you don't keep pursuing, it doesn't happen.
So, Pat, give us a little, let's just to segue for a little bit. I want to understand how you got into this business, what you've been doing for 25 years. But let's start with this number 2, second, support of estate tax provisions, which is to reduce the rate of estate tax from 40% to that of capital gains tax rate, which is 20%. Has the estate tax ever been at the same rate as the capital gains tax rate in your 25 years of experience?
No, not in 25 years, but the tax law has actually been around over 100 years. Mm-hmm. It actually was initiated to fund World War I. So it's kind of disappointing that obviously that need went away a long time ago, mm-hmm. and we still have this tax in place. Mm. So the rate has been all over the place. It's been as high as 70%.
Right.
And it's been lower. So it has been at a 20% rate, but I can't even tell you what time period that was. So 40%, when you think about a 40% tax rate, almost half of your assets. And remember, when you pay the estate tax, it's not an appreciation tax. You don't pay a tax just on the gain. You pay a tax on the full market value. So it's really important, I'll segue a little bit and say President Biden is advocating, first of all, eliminating step up. So while step up is a difficult concept, what it means is because you pay a 40% tax on the full market value, not just the appreciation, your cost basis gets stepped up to that new number upon which you paid the tax, right? That new market value.
Yep.
So if you eliminate that step up, that means you're going to pay tax again and again on that appreciation, which is not right. I mean, that's why it exists. On top of that, he is advocating reducing this exemption that we now know is $11.7 million to $1 million. Well, I live in California. So you can get to $1 million very quickly with a home and a car and a few assets, right? Including, your retirement accounts, yes. Your furniture, everything gets included into your assets when you pay the estate tax.
Yes.
Most family businesses, even small family businesses, are not going to make it, in that threshold of $1 million. So we're very concerned about that.
Right.
And he's advocating reducing the rate back up to 45% from 40%. So, and on top of that, if you don't have step up, then you're going to pay capital gains tax. And he's advocating raising the capital gains tax rate back up to 43%.
Wow.
So that's, all of those things are very destructive to family businesses. I mean, at the end of the day, I don't think any of them are going to come out as he proposed. President Biden is a very good negotiator, and he does try to work with both parties. And so I'm hopeful that that's not what we'll end up at. But family businesses need to be concerned, and they need to be talking to their legislators.
100%. Understood. Surprising. I didn't know any of this. It's not something I've seen in the news. So.
Well, it was in his family's plan, and he talked about it, his State of the Union. So not in that level of detail, but it is very, very concerning. And like I said, I mean, this is kind of the worst news ever for family businesses. Mm-hmm. And in the 25 years I have worked on legislation, this is probably the worst proposal that I've seen yet targeting family businesses. Now, in fairness, President Biden has advocated for an exemption for family business and family farms. The problem with that exemption, as he well knows, because he was around, and so was I, in the 2000s, the early 2000s, there was an exemption for family businesses and family farms. It was repealed by Congress after about 6 or 7 years because it was so unworkable. And it's so hard to define a family business or a family farm. that they determined that nobody could fit the definition, ultimately, no matter how hard they tried to define it. And again, they repealed it. So I'm not optimistic at all that exemption is really going to help anyone. Understood. And the Farm Bureau, the National Farm Bureau, who we work with very closely, agrees with us. And they're very, very concerned about the elimination of step up and all of the tax proposals, as we are, and most organizations that support family businesses.
Interesting. All right. So Pat, tell me, just digress for a moment. How did you get into this field? What was your passion, your interest that led you here?
Well, let me just share this last slide, and then I would love to respond to that. Sure. So this is important because what we tell legislators, as I already said, family businesses plan their business for the long term. They truly give to their employees and their community. And if you can see here, 71% of them give locally as opposed to nationally. So why is that important to legislators? Because if that business has to be sold for whatever reason, for tax purposes or something else, 71% of their giving to the community goes away. So not only does the family suffer and the worker suffer, but the community suffers. And this year, it's not ironic, I guess it's unusual that 8% of these organizations weren't able to give anything. And that is due to the pandemic, which is very rare. Because I will tell you, last year, the local giving was 77%, and the year before it was 79%. So once again, a huge percent of family businesses give locally, and that's an important statistic. So I'm going to answer your question.
But let me interrupt. That's an interesting side note that you share. And something I do in my coaching practice is I donate 5% of all the coaching fees that I receive from each individual client. And I ask them to give me the name of some local domestic charities of their choosing that I'm going to donate that 5% in their name. And I do this because I believe in giving back, but I also do it because I believe that it encourages stewardship of my clients in their local communities. And I also think that it's a great marketing move for a lot of them because they can donate to charities that give them more visibility in the community. So this is great.
Well, good for you. That's so important. People forget how important our local community charities are. Obviously, they employ people as well, and they support their family businesses.
100%.
So I'm just going to thank the people that distributed the survey. Very important, and really appreciate their efforts. So how I got into working in Washington, D.C., my background is actually in the family office industry. I started in a single family office. I worked for the Marshall Field family. I actually worked for Ted Field in Los Angeles. And then I went and formed my own multifamily office that, before that was even a term. Mm-hmm. And I grew that business over the course of 20 plus years. And then I sold that business in 2009 to GenSpring. And then I stayed on as managing director of the West, everything west of Mississippi, and left at the end of 2017. During that time period, in 1995, I had a young client die at the young age of 38, and her mother died 5 years later. And I had to deal firsthand with the estate tax. It was not a good experience. And I was talking to some estate attorneys, and they said, well, this is a wrong tax. You're right. I said, this is cruel, what it does to the families and what it does to the business. And it's just a wrong tax for the country. I started learning about it. They encouraged me to go to Washington, D.C., which I had never been to. And very naively and stupidly, I decided I'm going to go there and I'm going to talk to legislators, and they're going to understand how bad this is and the laws are going to change. Well, lo and behold, here we have, 26 years later or whatever, it happens. And so along the way, I became familiar with Family Enterprise USA, and most of my clients were family businesses. I love family businesses. I considered myself a family business before I sold to GenSpring. And I really think that they are the lifeblood for this country. So when the board of Family Enterprise USA came to me and asked me if I would take over the running of that organization, I said absolutely, because it's also very synergistic with the work I'm doing with Policy and Taxation Group, because one of the most important issues for family businesses, not always at the top of the list in terms of one, but it's usually 1, 2, or 3, is the estate tax. And quite frankly, the best argument for elimination of the estate tax or reform is family businesses. And so it makes, to me, it makes a lot of sense. It sometimes confuses people because there's two different organizations, but there's a clear distinction between the two of them. I keep them very separate. I have obviously separate governance. I have separate boards. I wear separate hats when I'm representing them on the Hill. So anyway, long answer to your question, but that's really how I got to where I am today.
Interesting. So let's talk hypothetically. Let's suppose that the estate tax were 100%. And hypothetically, everyone starts from scratch all over again as they become a young adult. And would this completely devastate and wipe out family businesses because the family business wouldn't be able to successfully transition to the next generation, potentially? And therefore, family businesses would just close down? I mean, walk me through some of the thinking. Sorry for the background noise there.
That's okay. Yeah, you broke up a little bit, but I think what you were saying is, what if the tax was 100% of the assets? Is that what you were saying?
Yes, exactly.
Yeah, well, obviously, it would eliminate family businesses. I mean, they wouldn't survive another generation. And I believe that they're so important to this economy, as we saw in the research. I mean, they generate 59% of the workforce and 54% of the GDP. So it would really, there would be no legacy family businesses. There would be no legacy for the employees, for the families, for the community. And I don't know ultimately whether they would even, they would cease to exist.
Right.
It is really, and a lot of people talk about, well, you can plan this tax away. That's not possible. There are a lot of planning tools, but and I've done a lot of planning for families throughout the years. But at the end of the day, the planning only works if you're willing to give up the asset, control of the asset, or give the asset up entirely. And a lot of times that's not a good solution. Mm-hmm. So, it's not a tax that, some of the people on the other side of this argument say it's a volunteer tax, and it's not a volunteer tax for the reasons I just articulated. Plus, the reason for the argument on the other side is, well, we need this tax because there's this accumulation of wealth in this country and it's just wrong and it needs to be redistributed. Well, they're right. There is the accumulation of wealth in this country. There is a disparity between the wealthy and the poor, and it has grown. But that there's reasons behind that. We in this country generate, as more white collar jobs than we do lower level jobs. It's just the nature of things. Mm-hmm. And while I'm not saying it shouldn't be fixed in some way, I don't believe the estate tax is the answer, because if it was, the tax has been around over 100 years. And if it was, obviously it's not working. So we need a different solution. The estate tax, and most people don't know this, it actually raises less than 1% of tax revenues. So when people say we need the revenue, it's not about the revenue.
Interesting.
It's not about, it's really a political football. And I blame both parties. This issue has been a good issue for both parties. The Democrats like to use it against the Republicans, and the Republicans like to use it to raise money from their donors. So, that's why it's so important that people have a voice and they meet with their legislators, talk to their legislators, go to a fundraiser. Don't hesitate to ask them. A lot of people are reluctant to have an ask of the legislators, especially at a fundraiser. That's why you're going there. You obviously be polite and be courteous, but don't hesitate to email them, call them, ask them to do what you need them to do. But again, be respectful. I will tell you that I don't think anybody works harder than people in Washington, D.C. It's sad that people don't see that. I see that. They work long days. They work hard. Maybe they don't accomplish what we'd like them to accomplish, but they are good people. They all try to do the right thing. Not all of them do the right thing, but they do try.
Yeah, this is an interesting topic because also, as you're talking about trying to get parity between the estate tax and the capital gains tax rate, and make it equal to the corporate income tax rate, but yet Biden is talking about increasing the corporate income tax rate and eliminating some of the tax loopholes for a lot of the domestic corporations. So, I think it's really interesting to point out that you point out that only 1% of all the revenue comes from the estate tax. So does Policy and Taxation Group advocate for a particular tax policy that they think would balance the budget or, drive more revenue into the coffers? Is that even one of the solutions, or is it smaller government? Or is it both?
Yeah, typically what we say is, if there's going to be an offset, and people talk about offsets in order to eliminate this tax or reduce the tax, we're not the organization to find that, right? That's Congress's job. They need to find that offset. If I picked a particular thing that I think should be taxed so that the revenue would be offset, obviously that organization wouldn't be very happy. And I don't, that's not my job. Right. That's Congress's job. So, and I do think the revenue it's a red herring because it's not a significant number in the scope of things. And I'll give you a little inside information. The reason that President Biden included step up in basis, we believe, with increasing capital gains tax is for two reasons. One, all the researchers showed you can only increase capital gains tax so high, and then people just stop selling, right? Because it is somewhat of a voluntary tax. You can time when you want to sell something, not always, but sometimes. And they weren't generating enough revenue. So they threw in the elimination of step up so they could make more revenue. So there'd be a better argument, make more tax revenue, a better argument for the increase in the capital gains tax. That's how DC works.
Right.
And it's not necessarily it's absolutely not what's good tax policy or even what's good for the country. It is all around political, optics. And that is what's kind of unfortunate. And I think most people don't see because they don't see that, how the sausage is being made.
Yeah, this is very interesting stuff. And this is not stuff that most of my clients and most of the people that you surveyed who were G2 and I think G1 and G2 entrepreneurs dominated the survey results. But, in behind you, it are two signs that I asked for donate now. So I guess the questions are, what are they donating to or what, how is their money getting used? And do you expect to get much from G1 and G2 entrepreneurs, or is it all coming from the multi-generational, longer, people who have been 40, 30 years or more in business? So.
Oh, yeah, we get it from all generations because a lot of the, first generation entrepreneurs really understand it. And we obviously, if anyone wants to donate, they can donate on our website. They have that ability. Typically, with Family Enterprise USA, of course, we're supported by family businesses. And Policy and Taxation Group, most of those are family businesses as well. They also could be family offices that support the work that we do. To your point, the money goes toward the effort. So we don't have an office. We have an address in Washington, D.C. We work in Washington, D.C., but everything we do is remote. We don't have employees. We're all contract. So we have about 8 people. None of them are employees. We try to keep our overhead very low. Where the money goes is where it should go, which it goes for the work on the Hill. We employ 2 different law firms, the Brownstein Law Firm in Washington, D.C. and Squire Patton Boggs. We also retain people like Frank Luntz. Frank has worked with us for 25 years now. He helps us with surveys, focus group messaging, and polls. We're going to be in the field with him actually next week doing this because we need to understand what the voters think. And so Frank's another one. And then the research that we do, the professors that we hire, the educational organizations, and then obviously technology on social media, distributing the work that we do is so critically important. And then obviously, myself and the other contract employees. That's pretty much it. The money goes into what most people would call, programs.
Gotcha. All right. So I think rather than we have 2 organizations, familyenterpriseusa.com, I believe it is. Maybe right. Hyphen in between family and enterprise. Is there?
No, that's just my email address. So they don't need the hyphen.
Got it. And then there's Policy and Taxation Group, and that's also a .com.
Correct.
So great. And we'll have those in the show notes. And Pat, thank you so much for being on the air. I'm sure people will be turning to your websites to find out more information as well. You're in California. Where are you located in California?
So I'm in Orange County. So I'm in North County. I'm in Anaheim Hills.
Okay.
I've lived here a good part of my life, but until recently, I would spend a week a month in Washington, D.C. So I spent a lot of time on the Hill.
That's great. And Pat, I'd like to see if we could advocate for having more family business associations and groups. They have a tremendous chapter up in Sacramento, the Capital Region's Family Business. There's one good one down where you are, the Cal State University of Fullerton. And frankly, I don't think there's a whole lot in between the two that I'm aware of.
Well, there are about 40 to 60, depending on the activity, family business centers around the country. We work with them. I think Cornell, Dan at Cornell is probably one of the best.
Yep.
But there's all sorts of, there's a great one in South Dakota, one in Maine, one in Ohio. There's some really good family business centers around the country. We depend on them. We need them, and we really appreciate their help.
Yeah, I just would like to see a few more in like San Diego, Los Angeles, San Francisco.
I agree.
Where I do, which is my backyard. And I've had Dan on the show. He was terrific. I've had some of the others from across the nation, but I'm all in support. I hope we can get the word out about your survey. And thank you again for being on the show.
Well, thank you, Jonathan. It was a pleasure. I really appreciate it. And I wish you a great rest of your day.
Thank you. So thanks, everybody, for listening to another episode of the Disruptive Successor Show with Pat Soldano and myself. And if you like this show, you found it beneficial, share it, subscribe, and listen. Thank you.